Hey, did you know that central bank rate decisions, inflation reports, and also employment and GDP reports are powerful market movers? And you can find all these in the economic calendar. So let's go and study the calendar, and I'm going to show you how to use it in your trading. First of all, please do remember that we don't provide any investment advice, and all the material is made available for educational and marketing purposes only. And please remember to subscribe to the channel. That would be a great help. Thank you. All right, this is the TIOmarkets economic calendar, which you can go and check every day to make sure that you know what's happening in the economies and what probably is moving the markets. And I'm going to show you now how you can use this calendar for your advantage when you plan your trades in the morning. So basically, the calendar is set at the London time, so it's GMT plus 0 at the moment. All the timestamps here are in GMT. So first of all, when you see in the morning that we're going to have US PPI number coming out today, what do? I suggest that you put on your mobile phone a sound alert, maybe a quarter an hour, half an hour before this event, so that you are ready and prepared to trade this. Otherwise you might forget because you have so many things going on in your life anyway. But it's important to prepare for your trades so that you understand where the key levels are. You might have read my daily market report already, so that you understand how to what the major momentum in the market is at the time of these at the time of you trading, really. So look at the timestamp, set up your alerts, prepare for the trades. Then this column here tells you what currencies are mainly impacted by the event. And now that we know that inflation is a big theme at the moment, all the numbers that are inflation related, like producer price index, like it used to be known as a wholesale price index, but it's the official measure of producer prices in the United States economy. If you want to know more about this, go to Wikipedia and read the article there. But it's basically telling you what the producers are getting for their product. And this feeds down the line in the economy into the inflation numbers, into the prices that normal people, consumers, are paying for the products they buy. And that's how this feeds into the final CPI number. So therefore, because the central banks are so keen on managing the economy and managing the inflation, even though the past record shows that it's a bit of a fanciful idea, they believe they can do it, but in practice there's no evidence for it. Now, okay, that's another issue, but the thing here is that you can sort of understand what information is highly impactful just by looking at the calendar. If you go to the impact column, if you see a 3-star event here, then you know that you should pay attention. But if you follow the economy, macroeconomy, and if you follow the central bank policies and what the central banks do, and I think as a trader you should do that, then you should also understand what these different measures are. Like I said, you can go to Wikipedia and read about it there. Okay, so you set the alerts, you're ready to trade, then comes the event. Let's go and see what you should do then. Now that you know how to read the financial calendar or the economic calendar, let's imagine that we have an event coming up. I'm using the Dow Jones Industrial Average Index CFD here, and it's in the chart is in 30-minute time frame, and I'm basically going to demonstrate you a couple of things here. First of all, I'm going to show you what not to do and then what you might want to do. First of all, you might notice here that the market after trending higher, it trended lower quite a bit. So who knows if this market is going to still continue, if this is only just a sideways move and then the market continues down or it continues up. We don't know that. Nobody knows at this point of time. This is about 3 hours before the latest highly important inflation number, the CPI number. So that's one thing we don't know. We don't know where the market's going to go. Another thing we don't know is the CPI number itself. Analysts do have some expectations of what the number might be, and if you follow the oil price, for instance, you might see that the oil has been coming down. It's lower than it was 3 months ago. All this might actually feed into lower CPI numbers, but you don't know. That's the fact. And if you don't know how the market's going to move, and if you don't know what the CPI number is going to be, and you don't know how the market's going to react to that number, then you just really don't know anything really. There's no edge for your trading. That's why I'm saying always to our clients, don't trade before the event. Don't set the trades before the event. You sometimes might be right, but sometimes you might be wrong. And oftentimes, even though you're right, the market whipsaws so that your stops are taken out before the market moves in the direction that you anticipated. That's the worst option, to get stopped out and then the market moves in your direction, so to speak. Anyway, you can see that the market is just chopping sideways, no real direction here. And then you wait and wait and wait. The only practical and wise thing to do is to wait when you have no idea what the market's going to do. And then we move forward and bang, comes out the CPI number. The CPI number was actually 0.5% lower than the number before, and it was 0.3% lower than the analysts had expected. This caused the markets to sell the dollar and buy the risky assets, and the move in Dow Jones was pretty massive. And most of this move actually happened during the first 20 seconds. So because retail traders often rely on websites for their CPI number updates, it usually takes more than 20 seconds to get the numbers out. And if you're lucky, you get it in time. But then, even then, the market just moves so fast that any intelligible market analysis is just impossible. So the high frequency traders and algorithms, they make the best trades here, but we don't have to worry about those, because as you can now see that there's more money to be made once the market sort of settles and finds levels that it trades against. I have set these levels here for demonstration purposes, so that if we go back a little bit, you can see that these are levels that the market has reacted in the past. So there's the low, there's the high. Here the market has reacted to the level, and that one obviously. And if we go down, we can see that this was a level that market reacted to. So I'm kind of mapping levels here that might come into play if the report is either bearish if the market reaction to the report is either bearish or bullish. So now the market actually moves higher, and it starts to kind of chop around here. And you can see that it creates higher lows. So that's an indication that it wants to go higher. It pulls back a little bit, creates another higher low, and then starts to move higher quite a bit. So this move here was pretty significant. So you don't have to be a buyer right before the event or right after the event, and you can still make money. I'm not saying that you would be able to get these prices, but just for demonstration purposes, let's say that you bought at the close of this momentum candle here. And the market moved higher that's about 350 index points. If you risked $1 per index point, that would be $350 profit there. I'm not saying there's a perfect entry and exit. There usually isn't. But I'm using here an idea that you buy the momentum candle and you sell when you see the first sort of red candle here, indicating that the momentum isn't as good as it was. And indeed, the market moves sideways a bit and then moves higher again. Anyway, that was a good trade. But it just goes to show you that you can use the economy calendar for your favor, even though you don't know how to exactly get into the trades, or you might find it impossible to get into the trades right before or right after the event. So yeah, that's hopefully helpful. And if you have any questions, I warmly welcome all your questions. You can email us at support@TIOmarkets.com. Thanks for watching, and I hope you found this video helpful and useful. Please give us a thumbs up and also subscribe to the channel, and maybe you switch on those alerts so that you get to know when we release new videos. And also, if you have any questions, feel free to email us at support@TIOmarkets.com. Thank you so much. See you soon.